And Jayakumar, MD at Prime Securities, joins us on the show to make sense of all that is happening, not only in India, but global equities as well. Jakes, you've just come back from US to tell us what is the situation on the ground. And a lot of the move that we are seeing in the Indian market is in tandem with what's happening across the globe as well, right? Do you think the worst is priced in with respect to that inflation worry and the rate up cycle, etc.?
I think, we clearly must split this as pre-Fed meeting and post-Fed meeting. I think pre-Fed meeting, the consensus was that the Fed was way behind the curve and has been trying to catch up. I think once the Fed meeting has gotten over, a number of voices now believe that the Fed's actually probably tightened into a slowdown kind of scenario, which means that you're talking about the Fed probably moving slightly ahead of the curve, or at least in catching up with the market expectation. A lot of data over the next few months, I suspect, will show that the market expectation of 3.8% as the final sort of topping out the interest rate, if you will, may actually not be met, and it may actually fall well short of that. And the Fed's made it very clear that they don't want a recession. They clearly are tightening to make sure that inflation has come down to the levels that they have targeted. And they believe that this kind of a managed soft landing would probably or could possibly take place. Enough and more voices believe that 75 basis points was actually maybe, and if you saw the commentary thereafter, he in fact indicated that this is not a once in out of the way kind of tightening, that we could do another 50 to 75 basis points, but their resolve in controlling inflation was clearly spelled out. And I think that should actually have logically heartened the markets. A lot of people believe that the ability to create a soft landing will not be there, and that's where the markets may seem to have got disappointed. I think we are in the final stretches of this particular sort of bottom creation. I think we are a day here or a day there away from creating a bottom. And my personal feeling is that from an India perspective, and that's where I would like to differentiate between what I saw in the US, the kind of issues that there are vis-a-vis India, where both corporate balance sheets, like in the US, are deleveraged dramatically. In fact, there are hardly any large industrial groups that are over-leveraged in that sense of the word. Compared to that, the retail worries that are there in the US, were there to be a recession, large retail defaults, is not the situation in India. India can spend and will spend on infrastructure. That's the third thing. But the underlying theme clearly is that world over, prices, price controls are being put in place. So a number of things which purely went up because prices went up in a commodity boom, those could be problem areas. Whereas manufacturers who are integrated and therefore have the benefit of cost reductions both on the input side and on the intermediate side, though offset by the end prices coming down. The integrated manufacturers, especially in the industrial world, could actually be beneficiaries. So if you just take a broad spectrum, I think deleveraged balance sheets, not terribly leveraged retail population, if you will, in India, but more importantly, the big infrastructure push that the government will give, and maybe private sector capex coming in. These could be the triggers that make, I think, buying and creating a portfolio at this point in time probably one of the best markets in the world in that sense, both in terms of diversity and choices that you can have, various industries that you have, and in terms of a global theme, in terms of people setting up shop in India and exporting from here. So I think on a whole bunch of parameters, I would say that both the RBI as well as the Indian government have been a few steps ahead of many of the policymakers worldwide. And I would really laud both the RBI as well as I said, the government in terms of coming through on measures that will stand us in good stead. I have no doubt about that.
Right, Jakes. Jakes, Pankaj also joining in. There is a very special reason why we've lined up this interview. And markets will go down, interest rates will come up, go down, corrections, attractive, overbought. Have you realized it's been 13 years of ET now, and you've been an important part right through these 13 years across interviews, across coming to our studios, doing phonos, doing breaking news. So how would you say about this journey of 13 years for ET now?
Well, heartiest congratulations for starters. In fact, the question straight went to the US visit, so therefore I couldn't resist sort of answering that and then coming back to this. But heartiest congratulations. 13, by the way, is lucky for a lot of people. Never mind what folklore says. And I'm sure for ET now, this will be one more step in the right direction in terms of creating a fabulous platform that you will continue to evolve and grow into. And a lot of retail which watches you gets to see the balance, gets to see the two sides of the coin, if you will. And congratulations both to the group and to the channel. You guys have been absolutely fabulous in creating a niche for yourself in the market.
So, Jake, you spoke about the macro picture, how things are moving in. Two important trends of last year. One was IPO market and the way it boomed in 2021. And second was any company showing high growth was getting a very, very high PE. How would you look at these two themes after this correction?
Inevitably, after the correction, people tend to go back into, should I say, defensive spaces. But if you look at the way valuations have been, I think valuations were factoring in last year 0 to no interest rates effectively, or very, very low interest rates. That's changed completely. So a lot of the high PE stocks have come under the hammer and have corrected quite dramatically. But most importantly, those stocks that have corrected are those that are over-owned by the FIIs. I think it's financials and IT principally, which have really taken it on the chin. So the way I see this is that in the short run, when markets bottom out, paradoxically, stocks that are beaten down most may actually jump, sort of spring back to life, initially. There are a number of stocks that in various industries, including the leaders, I think have become significantly more attractive than they were. In fact, they were attractive even before the fall. They become even more attractive now. People have looked at metals as a cyclical play. I believe it's a structural play. And as infrastructure in the world grows, see, the important thing is that you have technology that's eliminated a number of jobs in every country virtually across the world. And it's the old economy, whether it's construction, whether it's road contracts, bridges, that kind of stuff, building, that will bring back jobs back into the fold. And I think from that perspective, I would say that we probably are in a situation where metals are going to be seen as, especially steel, going to be seen as structural more than cyclical. All these balance sheets have gotten corrected. So that as a sector, we really like the not the commodities play as much as the steel sector, which has got consolidated, balance sheets have got deleveraged, companies have got integrated, margins are now being captured in the value chain because they're integrated from commodity end to the final end consumer, end product. So given all that, I think there is a lot of juice left there, and they're inexpensive in valuation. In terms of pre-revenue companies and the new age companies, multiples have cracked simply because these markets have not had the ability to digest more and more of these sort of high valuation plays only on the basis of the future, especially when interest rates are on the rise. So if you eliminate those, sort of aberrations in the marketplace, I think markets have corrected. Corrections are never healthy for people who are part of the corrections, but it's definitely good from those who want to put incremental capital to work and those who got SIPs going, that you can average into this. And I want to re-emphasize that equity investing in this country, with the choices that it has, with the kind of mutual fund industry growth, I mean, I believe it's never been better. And if this was the environment when we started work in the mid 80s, I'm sure all of us would have built up portfolios naturally and organically as well, in addition to actually having to construct portfolios only when surpluses got created.
And that's sage advice coming in for the retail audience who is a bit perturbed by the volatility that we are seeing. You need to kind of continue, maintaining the momentum as well as keep the discipline when it comes to investing, because a large part of it is also patience and waiting for that, waiting for those returns as well. But Jakes, wanted to understand that what I infer from your earlier answer is that you're looking more positively towards domestic cyclicals. If that is right, how are you looking at the entire auto as well as financials pack?
See, the ultimate turnaround will happen when the CV sector turns. Auto clearly is showing signs of turn. Of course, the kind of people, the consumers of the auto sector have also changed. Individuals have now moved to things like ride sharing, etc. Excuse me. So I think from that perspective, maybe the pattern of buying may have changed, but I think the fact that the auto industry is moving more into EV, more into new age technologies, etc., is indisputable. And to that extent, I'm positive on the auto space at these levels. They have consolidated for long periods of time. And maybe going forward, even with the metal prices having sort of corrected quite a bit, this sector could benefit. Demand offtake, which has been a little, lax in between, may actually get perked up. So one, that, and the second is in terms of scrapping, etc., those policies keep getting evolved. So demand for new cars and new vehicles should definitely perk up as the capex cycle here improves.
Jake's just beyond with us. Anisha, in the pre-COVID world, whenever I used to meet or call up Jake's for any interview or anything, the most interesting thing used to be what's happening in the world of sports. So, Jake's, what's
he's an ardent football as well as a cricket fan, right?
Beyond football and cricket. So, Jake's, what's the latest in terms of sports? What's keeping you busy? What are you going to look forward to?
Well, there's actually a hell of a lot to look forward to in the world of sports. I think it refashions people's approach to life. A sportsman, they say, is as good as his last game, if you will. So similarly in the markets, you're as good as your last idea. You're as good as your last win. I keep joking with people that the markets are a great leveler, like sports, that on a good day, you get knocked around 20 times, but on a bad day, you get knocked around 200 times. So the difference is that can you get up and get back into thinking straight and thinking differently? Of course, sports is telling you, just look at the world of tennis, for instance, the evolution of the new stars. Look at, the memes and the jokes going around, why some things on the French Open have not changed with Nadal around for the last 18 years and so on and so forth. So, sportsmen, longevity, look at the F1 change. So apart from, of course, cricket and football, which I'm a huge fan of. So there are multiple sports I watch. And of course, more recently, as is going on currently, the finals of the NBA. The basketball is a big thing in the mornings. So the entire day is kind of taken care of with, a judicious mixture of sports and work.
That is the perfect balance to have, right? And as you pointed out, yes, a lot of these, there are a lot of new names, but the old ones are still doing well. And perhaps that's something to learn for the markets as well. Jakes, thank you so much for joining us. Really a special occasion for us, and appreciate your time today on this show.
Thank you, and a very happy birthday to all of you. And, keep the good work going, Pankaj and everyone else. Thank you.
Thank you. Thank you so much for joining us. Well, it's time.